Well, it's a fun time of the year. We're entering that Christmas season, so we kind of have a Christmas play on words here today, right? The stocking stuffer versus the big gift. Short term versus long term investing. Okay, Caleb, what are we talking about?
Yeah, kind of like riding the lighted fire truck. It is that time of year where, it is Christmas season and people are thinking about, gifts, some big, some small, and some that take time to appreciate. And, one thing we want to talk about is, how do you think about it when it comes to your investments and try to tie those things together? Because, just like with Christmas, sometimes it is easy to get it caught up in just the excitement, the gifts, the quickness of it, just the material part of it. So, and there's different ways that people value gifts, and we kind of think there's different ways you think about your investing too, and you can frame it that way. Some people, get caught up in the day-to-day and checking it and making a trade, and those are kind of maybe the stocking stuffers we'll call, that they're trying to get those quick gifts, but the real joy, often for most folks in their investing life comes from those big meaningful gifts, or seeing their long-term goals come together and their wealth grow and be able to do the things that they truly want to, more kind of than about the money. So today we wanted to unwrap a little bit, what that balance looks like, and talk about short-term versus long-term investing. And, as we're calling it, the stocking stuffers versus the big gifts. And how do you think about those and what are those in life?
All right. We'll unwrap it.
Yeah.
All right. I love it. Okay. Let's start with stocking stuffers. So the short-term trap. Amy?
Yes.
What are we doing here?
If you notice, I'm kind of dressed like the stocking stuffer. I'm all, bright, shiny.
You are.
Got my hat, got my lights, got my Christmas sweater on.
Yes, very Christmassy today.
Thank you very much.
Very
And
Christmassy.
the stocking stuffer is kind of when someone jumps on a short-term hype. It's maybe the latest stock tip they're getting or what people are talking about on social media. You feel a sense of urgency. And then you might be disappointed when it doesn't turn out to be exactly what you thought it was.
Yes.
You can miss some opportunities when you are always chasing the short-term gain. Like Caleb said, the gift is really in the long term. And it can serve a purpose. Your short-term investing is like keeping some money accessible, and taking advantage of short-term windows. But if that's your whole strategy, it can leave you feeling really empty-handed later on. So somebody might say, boy, I can't be so patient. I can't wait 20 years. I need to have that immediate sense of accomplishment, that immediate sense of, hey, I got the hottest, greatest, newest thing. But really, if you focus on that all the time, that's emotional. And those emotional decisions that you make, they can really lead to a lot of anxiety and stress. And you just think about if you're watching the markets all the time, checking your account constantly, always chasing the newest and brightest thing, you really can spend a lot of time and energy and miss out on some great opportunities. So a few stocking stuffers in your portfolio, they're fun to have, and we're not discouraging them. But just don't skip the big gift stuff. And that's what Caleb's going to talk about a little bit more.
Let's do that. The big gift. Long term. Caleb, tell me about it.
Yeah, and that's what's hard. We talk about it all the time in different ways of just that instant gratification versus long-term planning and stuff too. But around the holiday season, it is kind of the same thing, because that long-term investing strategy, it is the big gift. The big payoff is that compounding. That's what it does for you, that compounding over time. And we've had that. For anybody that's been an investor the last 3, 4, 5, 10 years, look at your returns, look at your statements, and see those compounding returns. That is the big gift in that too. But to Amy's point, there are some, wins and stocking stuffers, or some things you want to have along the way, which is good too. But there is that balance, because, when it does come to retirement planning, legacy planning, funding the next generation's opportunities, or, whatever other goals people have, those don't happen overnight for most people, unless you win the lottery or sell a business because you had a great idea, that doesn't happen overnight. So, there's always planning that really matters to get that done and accomplish that. And, you want to know what you're saving for and when you'll need it, and that evolves over time. When that evolves of what your planning needs are in your 20s, 30s, 40s, 50s, 60s. But, knowing what that is, having that timeline helps decide how much should go towards those long-term gifts for you and your family versus, what should stay liquid and be in the stocking to spend now and have fun now for you and your family. There is that balance there. And like Amy kind of mentioned, when people hear long-term investing, they think it means, maybe never touching their money. But, that's not how it works. It's a balance, or what we call like a bucketed approach. How do you bucket those different pools of money? And that structure can kind of help understand what's for now, what's for later, and, what's building that mix that serves both. We talk all the time, too. I say this, I know all the dollars and cents of being an investor, but I raise a family and have 3 daughters and stuff too, so it takes a lot of money to do that. Yep. There's a balance there to do that. And it's important to know, what is that big gift for you? And each family and each person's different. For some people, it is retiring or retiring early. Sometimes it is their dream home or vacations, or it's just, some folks living comfortably or providing for that next generation. But those big gifts take time, and they don't mean that you don't enjoy the parts along the way. You just kind of got to know, what are the parts I want to enjoy and how do I want to enjoy it? And that reward for patience is that growth, that feels steady and purposeful, which again is the perfect time to be thinking about that this time of year. Mm-hmm. But when you step back from that daily noise, you can, hopefully see that progress year over year, or you have somebody, an advisor, somebody that's helping you track that and giving you some of those little gifts along the way too. We talk to our clients about, rewarding yourselves along the way. If you do get a promotion or get a raise or something, of course you want to save something up, but go have that family vacation, do whatever that is. But that does take discipline, and a clear path, and, someone that can, hopefully keep you on that path, whether it's yourself, your spouse, or again, an advisor that kind of works with that plan.
All right. Absolutely great advice. So with everything, there's a balance, right? So the short term and the long term. So let's talk about balancing the two, creating a plan that serves both. Amy, how do we do that?
Sure.
Or can we do that?
Well, you can. And the first thing that you really want to do, like, Caleb touched upon, is you want to know what your goals are, what your timeline is. For example, if you've got some money that you're going to need in the next year or two, well, maybe that's a stocking stuffer goal. You're going to keep it accessible, keep it ready for you. If it's money that you're going to need, 5, 10, 20 years down the road, that's the money that you want for the big gift. So it really depends on what you're going to need the money for. And it's not really always about your investment choices. It's about your mindset. You want to be comfortable knowing what your plan is, how your money's going to work for you, how your money will work quietly in the background. And we've had people tell us before, I just really want to have some cash on hand because that helps me sleep at night. And that's all right. Everybody needs to have their own comfort level. Mm-hmm. But we also visit with our clients about what if you have too much idle cash, is it possible that cash could be doing a better job for you? Mm-hmm. And for example, we've got 2 employees, Dan and Diane, who both worked in banks. And they've noticed that, over the years, this was years ago, but people would bury their cash in the backyard in cans. And they brought their cash into the bank, and it just disintegrated and fell apart. So it just didn't work for them, right. And in fact, it lost value. Well, we want to just caution people about the same thing. If you have too much money in cash, then it might be just like sitting in a tin can in your backyard. It could be used for better reasons. It could be working for you in the background.
Absolutely.
So that's part of the balance. You don't have everything, in the big tech. You don't have everything in cash. You know what your goals are. You think about your timeline, and you talk to your financial planner. And we do this all the time, and we help people position themselves so they're going to feel comfortable and they're going to be able to sleep at night.
Well, and part of that may be, in that scenario, of, you do use some of that. If it is idle cash in that scenario, that is a part-term stocking stuffer. Hey, do a home upgrade, take a trip, buy something. But then part of it is, hey, it is longer term. So that's why I was going to say, there is, even within that, there can be a balance or a split between that because it is enjoying it.
Okay. Great information. Again, we are visiting with Milestone Financial, building rural wealth. So if you have that can of cash buried in the backyard, you might want to go, well, that's frozen now. I don't know. Maybe. So wrap this up as we as we put all this together? Caleb?
Well, one thing I'd say, heading into the new year, and like we've talked about this, is there's tools out there to help you kind of figure out that balance. It goes kind of back to budgeting to me in personal finance. Making sure you have more coming in than what's going out, and knowing that. And there's tools today that help you do that. There's budgeting tools. There's spending analyzers that your bank or credit cards do for you that tell you, hey, this is how much you spend in each category. This is where you do. This is how much you have saving left over. So that you can, what those things are too. But also, there's tools today that, AI tools that teach you about budgeting, that can teach you that if if you can't go ask somebody else or work with somebody else, teach yourself, take advantage of those things too, because they are out there. But it truly, like what we talk about all the time, is balance, for everybody. Money is kind of an object. You don't save all this up to do it. You turn it into, real world experiences, things and stuff like that too. And, when we're surrounded in these reminders of generosity, patience, and the, joy of giving and having those things, that's, what you want to try to do with it. But having that plan can be a gift in of itself too, and kind of knowing where you're at.
You bet.
Yeah, investing is kind of like the gift that you give yourself. So you should always make sure you give yourself a gift first, and don't worry about filling, somebody else's stocking full of things before you reward yourself first. And you'll feel a lot better once the new year rolls around and you open your credit card statement and you don't go, ah!
We don't want that reaction.
No.
We don't want that, Amy.